Markets move fast, but the candles weren't first. Welcome to Daily Market Waves from Investing Angles, where every candle speaks, every wave reveals, and we chart the term before the herd even blinks. Today's lineup is loaded. TLT, we pounded the table, and it delivered. US yields, perfectly aligned. Canadian yields, a surprise no mortgage holder wants to hear. Volatility, is the storm calming or about to reignite? US dollar, is the bottom call still alive or off the table? Gold and coffee, our warnings echoed. We hope you listened. Oil, pausing or prepping for a new wave? And what's up with ConocoPhillips? S&P 500, a multi-angle lens on the index sectors and large caps. NASDAQ, is it aligned with an S&P? And the feature of the day, live Elliott wave analysis of Seng. Don't miss this. If you want to catch moves before the headlines, you're in the right place. Smash that like, ring the bell, and share this with your trading circle. Let's dive in, starting with TLT. This is the TLT closure of today. Yesterday, in our weekly review, we discussed a very unhealthy candle sequence, like 3 candles, 3 bearish candles in a row, and 5 total of last week. Now we are seeing why. We have a strong bearish reversal, and this is technically not only a reversal but also a confirmation. And it not only happened on the daily frame, it also happened on the 3-day frame. Most likely it will be a huge bearish engulfing tomorrow. And today's candle, we have a 5-day closure, and this candle closed just below the 90.30 level, which is differentiation between the complete and incomplete dark cloud cover. So we have a dark cloud cover plus a hammer. Well, on the 5-day frame, that's significant. Be prepared for a move lower. But if we look at the Elliott waves, this is exactly what happened. And I warned yesterday that it shouldn't happen if TLT is supposed to move higher. However, it is what it is. We have a most likely an ending diagonal for wave C, and this is not only an ending diagonal, it also a truncated correction, ABC of a bigger wave. Now what we are seeing here is a strong move down. Considering this is an ending diagonal, then we would be looking for immediate return to the level of origin, 88.45. There is still a possibility for a bigger ending diagonal. This is something that I would like to keep for now. So this is another perspective for wave to complete. There is a chance, but this chance is very minimal at this point. If, considering the strong candles and all technical events, if TLT moves below 88.45, technically this purple path for a bigger diagonal would be invalidated, and we would be looking for the next stop at 84.85 and lower. We will discuss it once we have the break and the potential target, most likely tomorrow. Now let's have a look at the 10-year yield. So what we are seeing here is a very strong bullish engulfing. And now we have a chance of a strong reversal. We can see that the rate moved above the 8 days moving average, and it's still growing as we speak. So there are still 25 minutes to go. And now what is happening, the 2-day frame also can close with the bearish engulfing. I'd like to say that on the 2-day frame, we just talked about the bearish flag on March 29th. We have a beautiful execution of the flag arriving just in the middle of the target, and this is great achievement. Now we are looking for a reversal. If we look at the bigger picture for 2, 5, 10, 20, and 30 years yield, they are all aligned with very strong bullish reversal candles. So get prepared for a rally upward. And the final, in the bond market, I'd like to say something about Canadian bonds. Being from Canada, this is a very pressing issue for myself and for my compatriots. So what is happening here? Canadian bonds 5-year yield most likely formed a very significant ending diagonal starting from the beginning of April 2024. So it's technically a year-long diagonal. So what is happening right now? We are seeing a very strong bullish reversal candle, and as we know diagonals, I think that the best case scenario here would be a quick jump to 3.352, and the worst case scenario could be a sharp return towards 3.9. Let's see how fast it happens. All right, so that's the perspective. This is the messages from the bond market, and now let's move on to other instruments. Volatility Index. What we are seeing here is technically red candles. However, I would like to say that they are not necessarily bearish. At this point, these candles could be on neck or in neck candles, and this could be a continuation candle, a continuation doji. I can see that this is way above Bollinger Bands, and all the technical risks are here, still here. The volatility is overbought, and this is another risk. However, if we look at the 2-day frame, they closed today with technically strong bullish candles, signaling a continued move higher. However, we might see another pullback here, but at least until we see a very strong confirmation of this potential reversal, the odds are bullish but closer to neutral. That's the perspective for volatility. Now let's move on to the next subject, is the dollar index. What we are seeing here today is the dollar potentially forming a bottom. There are still almost 2 hours to go until the closure, but if dollar closes above the Thursday high, it will be a reversal on a daily frame, and at the same time it will be a strong bullish harami candle, which would require confirmation, obviously. However, it will be bullish on this frame. And if we look at the hourly chart, for example, there is a chance that dollar formed an impulse here. Although I am not quite fully satisfied with its perspective, so with the wave count, but there is a possibility that this is an impulse. 1, 2, 3, 4, 5. This would be wave 2, and now we are looking for wave 3. I will monitor it until the end of the day, and we'll see whether we are indeed moving higher. However, this is a very good possibility for starting a huge impulse upward. That's for dollar, and now let's move on to our commodities sections. In commodities, we will discuss today gold, coffee, and oil. Let's start with gold. So as we said in our weekly update, gold confirmed a reversal on the daily frame and made a very significant dent into the weekly. So now the odds are escalating. bearish odds are increasing sharply. We have a very strong bearish continuation candle on the daily frame closing in 49 minutes, and there is almost a guarantee that this is going to be a strong bearish engulfing on the 3-day frame, which is a huge escalation compared to the daily frame. The 5-day frame will be closing tomorrow, and it also has a chance for a strong bearish reversal candle. If nothing happens, if there is no rally tomorrow, this would be it. Speaking about the charts, this was our early warning on April 3rd when we said when gold was 3114. We said that this is potentially a reversal. This is wave 2 forming. It was a corrective wave, and now we would be looking for a move down. This is exactly what is happening. And this target that we indicated there, 2999.56, it's already broken. And the next target would be 2832.73. So far, the way down has been impulsive. I would say that this is probably wave 3 being completed. Now we would be looking for wave 4, another consolidation maybe for a day or two, and the next wave down. If we look at the even bigger frame, this is the early warning again on March 28 when we said that this wave is very ugly from the perspective of Elliott waves, and if we're talking about impulse. So this is the chance that this is an ending diagonal. So far, this is the daily frame. This is called futures, by the way. And there is a chance for 3 black crows. I'm not quite happy with this overlap in the three black crows. However, it's still a good chance for a similar formation. If this materializes, I would say that the ride towards 2541.50, which is a November low, would be in the cards. Let's see what happens next. And speaking about the GOD trust, the same situation here. We have a confirmation of the reversal on the 2-day frame, on the daily frame, and the weekly after dark cloud cover. So far on track for a very significant confirmation. Let's see what happens next. And I would like to say there are quite a few technical signals, like for example this, the freshly made MACD bearish cross, and a few others. Now let's talk about coffee. Coffee is falling hard, and on March 29th we made an alert saying when coffee was 382.78, we said that coffee is set to fall. And since then, the commodity lost 10.5%. And the candle and technicals suggest that this is going to be a continued move down. Our preliminary target, if you want, you can rewatch the video that we posted then, and we also made a couple of updates in our latest commodity update on Saturday. We discussed about potential target of 260 estimated by multiple methods, but this might not be the end of it. This is potentially the target somewhere between 145 and 200. Well, that's a quick update on coffee. Now let's move on to oil. What oil candles are telling us? The candle closure today is neutral doji, and I would say there is a very good chance that this decline will continue because the 3-day candle formed a very strong bearish continuation candle, potentially forming a falling 3 methods on an extended number of candles. And this is our weekly famous candle perspective. This is a very clean falling three methods that we've been talking about for over a week. Now let's talk about the charts. This is our warning on April 2nd, when we said that oil is set to fall after completing a flag, when oil was 70.21. And right now it lost about 13.5% since that call. And so far we are not seeing a reversal pattern on the candles. And it's already beautifully in the minimum target. And I think that this is wave 3 at this point, and oil has better chances to move further down. If we look at technical perspective for oil, this is light crude oil futures. They recently, just a few days ago, they made a bearish cross on the 4 months frame, which is quite rare. I think it happens only a few times, 4 or 5 times. And we run some statistical analysis here. Our expectation is that crude will get somewhere between $50 and $30 per barrel. So that's the perspective. And we'll see if this cross is confirmed at the end of April. If it does, well, it's going to be the path. And if we look at, this is Brent candles, something that we highlighted way back in September, saying that Brent formed a 3 black crowns on the monthly frame, and there are gonna be consequences. Brent tried hard for 6 months to reverse this pattern unsuccessfully. Now it is falling down. By the way, breaking through the 100 months moving average, which is a very rare signal for the commodity. And the final one in the oil section, I would like to speak about the ConocoPhillips company. What is here? What is happening here? Our call on January 29th, when we said ConocoPhillips made very unhealthy candle formations and some technical events that will be driving it towards this target 79 to 45. It's been quite wide at that point, and it still is. Since then, Conoco lost about 15.5%, and this is approaching our upper boundary of the target. Well, that's quick update here, and so far we are not seeing any events which would prompt us to change or update this forecast. Now let's move on to the stock index, to S&P 500 and the other major indices. S&P 500, NASDAQ, Dow Jones, and Russell. All of them formed today green candles. However, they pushed the price lower, and only NASDAQ, I think, closed in positive today. However, all these candles are not bullish yet. They need strong confirmations. Until they confirmed, we can consider them as an in-neck or on-neck patterns. And these are technically bearish continuation patterns. And there is little technical support at this moment for any bullish reversal. And if we look at the bigger frame, 5-day frame, which closed today, these are just plain ugly bearish continuation candles. We are looking for continued move down. Even though the indices are oversold on multiple frames, so far we are not seeing a strong reversal signal. Now let's move on to Elliott waves. This is the chart that we shared back in April. This is the previous version of the chart on April, and this one we discussed on March 31st, when we said there is a good chance for red pass. And well, there were quite 3 passes on the table at the moment, but in 2 days S&P 500 invalidated the blue one, then invalidated the purple one, and left only the red one on the table. And it perfectly hit our target 5,002.25 and even surpassed it. Now we can remove it safely. What we are seeing here is the potential for two waves here. One is wave 4 and one is wave A, B, C of a bigger wave B. This perspective remains on the table and we are not changing it for now. If we look at the small time frames, this is the wave that S&P futures formed off the bottom. We are seeing that this wave is likely corrective. So at least I'm not seeing any potential. It could be a diagonal, by the way, leading diagonal, but it's so ugly that it's I have been skeptical about it. So most likely I would be looking for this potential. So this would be another wave. Oh, I apologize. I need another. So this is potential for A, B, C here. Let me change a different wave. So this potentially wave A, another wave B here, and maybe wave C, maybe a rally tomorrow. Let's see how it executes. So far, there is no reversal, no strong reversal or impulsive wave upward. And I'm talking about this one. So it perfectly fits into either scenario for wave 4 or for wave A. The only difference with this chart is that the wave is way too sharp, but that's normal for a bear market. Now let's move on to the sectors and see what sectors are preparing us for. So technically the same thing happened with the daily candles. The candles here, all of them formed a bearish continuation, either in neck or on neck combos. I'm not seeing any strong reversal. Well, they still can transform into bullish candles, but they would need a very strong confirmation tomorrow. And until it happens, we are bearish, maybe closer to neutral. And a similar thing with the big caps. The only difference is that I would see that Amazon is quite bullish, and Nvidia also formed a piercing line, and Meta also formed a bullish engulfing here. So these three are quite bullish for tomorrow. The other ones are needed much stronger much stronger bullish move. And I would like to say that Apple, as expected, it delivered a death cross, 50 over 200 days moving average. Google is on track to make it tomorrow, almost guaranteed. Nvidia is already under the spell, and I think that Tesla is falling here and is working hard toward recording this cross. So the other technicals are practically unchanged. And now let's have a look at NASDAQ. So what NASDAQ is telling us is practically similar to what we've seen for S&P 500. I would like to remind everyone about this call on March 27, when we said NASDAQ is about to fall hard because it formed a bear flag and it's about to break it. So the breakdown happened right here, and the NASDAQ arrived perfectly into the lower boundary of the flag, and by the way, losing 17.4% in the process. Quite an amazing call. Now what we are looking for NASDAQ is somewhat similar for what we are looking for S&P 500. Either the purple wave here develops as a larger wave B, or this impulse continues in the blue path. We have waves 1, 2, potentially this is the end of wave 3, wave 4, and 5. 5 in our case would be lower than wave 3. It would go somewhere here. Well, that's the perspective for NASDAQ. Let's see how it develops. I'd like to say that NASDAQ is also developing a corrective wave upward, similar to what S&P 500 does. That's been all for US market, and per request from several our members, I will be doing a live analysis of Seng Hong Kong Index. So what we are seeing on the candle side, a candle's perspective, first of all, a very strong move down on the daily frame, breaking below the 200 days moving average, which is a very strong move, even though the index is oversold. Maybe we can see a bounce which would close the gap here. Maybe not. Maybe just a little bounce in order to normalize the indicators. But this is a bearish, very bearish move. The similar happened on the weekly frame when we see this build up of bearish candles, and now we are seeing a strong confirmation. If it closes like this, it will be a break through the 200 weeks moving average, another big one. And I would like to say that from the technical perspective, it would be a MACD bearish cross on the weekly frame of one of the record magnitudes, which would drive the index downward. If we look at the weekly, at the monthly frame, the index formed a very concerning doji at the end of March, and I'd like to remind these two bearish death crosses, 50 over 200 and 50 over 100 months moving averages. So far, if the index closes like this, it will be a tower top, and this would be just the beginning of a ride downward. And now the most interesting part. This is the chart that I completed on October 3rd, 2024. And this is how this chart looked then. So what I was thinking, this was the top, wave A, wave B, and the index was developing wave C here, potentially as an impulse, 1, 2, 3, 4, with the targets somewhere here. I was saying that because of this wave structure, the index could be developing an ending diagonal for wave C of wave 4, and it would be a rejection here somewhere and the move down. I had a wave 3 in green, 4 and 5 as a potential counts, but I wasn't very happy about them because of many stretches from the Elliott wave perspective. Now let's have a look at this chart and make some adjustments. So first of all, I'd like to say that this ending diagonal is now complete. So this is the diagonal that we pointed in. This is wave 1, 2, and wave 3, and wave 4 and 5. So this is the end of it. Now we can see a bearish flag in even better perspective. So this is bearish flag. And now if we try to estimate, so yeah, first of all, let's remove this green count. It's no longer valid at this moment. We can bring it up later, but not now. So what is this is the weekly frame. Okay, so now we broke through this level that I indicated back then, and right now this ending diagonal is considered complete. Speaking about the target for the flag, I think we can make some adjustments here. So this would be the most typical targets here. And I would say that let me put it here. So this is the most typical, and I will put a few more. So this is the minimum target for the one, and this is the maximum, the worst case scenario. All right, so this is the chances that this wave would be an impulsive wave 5 of C. So in our case, we would be looking for this scenario. This would be hard to imagine, but nevertheless, I would say it would go even to here. However, I am, once we have this particular frame, let me change it to slightly bigger. This is an 8-day frame right now. I'd like to bring a few more target lines. So this is potentially the new channel. And if we look from the new channel perspective, we might need to move this a little to the left or to the right. And this would be our perspective area for our expectations. So this is the target lines. This is the new date is April 7, 2025. And what I would be also looking for is a slightly different wave count. This would be wave A. This would be wave B. And this would be wave C somewhere here. At this point, it's not very clear. However, we can make some estimates. So we have a flag target estimate. We have an estimate for an impulse from 1, 2, 3, 4, 5, somewhere in the same area. And this would be, I would say, the worst. Somewhere here, this would be my best case scenario. Okay, so I want to bring to front. This would be my best case scenario, 13,200 for the index. So this is the best case scenario, and these are best case for the flag, worst case for the flag, and the middle point for the flag. That's the perspective. This is what I am looking for the Hang Seng index after this move. And the most immediate target, as we already know how to deal with ending diagonals, this would be it, 14,786.2. So 14,786.2. This would be our target for this particular wave, for this particular move. So now we have a complete set of the picture. This, now you can take a picture of it, and I will post it later at investingangles.com in much better quality. Well, now let's wrap it up. From yields sinking across borders to volatility's next chess move. From gold's crumble to oil's hesitation. Today's chart weren't just reactive, they were predictive. TLT warned, coffee and gold fell right in line. Hang Seng, live wave setup. You saw it here first. What's your top setup for the next 48 hours? Drop it in the comments. Let's chart it out together. And if you have a request for me, just say it in the comments and I'll do my best to do a live analysis in front of everyone. Join our Discord where Master Trader Kyle and the team are mapping the markets in real time. Like, subscribe, and share this video to keep your crew ahead of the curve. And for the multi-timeframe Elliott wave, candlestick, and statistical edge, head to investingangles.com, where precision meets prediction. Until next time, stay sharp, stay objective. At Investing Angles, we chart the turn before the herd even blinks.